One of the most important things that investors need to do when it comes to their agriculture portfolios is really do a deep, informed dive into the nature of the water resources that those portfolios are by definition depending upon. The sustainability of those resources, the viability of those resources. Because even in the event that you are legally allowed to be taking more water out than the safe yield of that basin, ultimately that's a no-win situation. Because while you may be able to farm for a period of time, your ability to monetize your asset at the end of your hold period basically becomes impossible if there's no water to sustain that asset. Equally speaking, as you're pulling more water out and the depth of the water is going down, it becomes incrementally more expensive to lift water, which is very heavy, up to irrigate your crops. So you need to understand the viability, sustainability, hydrology, and legality of your water resources. And that requires an investment. And that requires asking questions that a lot of farm managers apparently have not asked. The reason I say that is because we're aware of some 200,000-300,000 acres of permanent crops that have been planted in California, which are not planted using reliable water resources, i.e. sustainable, high priority water resources. Now, traditionally in California, they were able to overcome that problem by putting additional wells in the ground. In light of the Governor Brown's new law, the Sustainable Groundwater Management Act, and there's that word sustainable there, that's not going to be as easy to do in the future as it was in the past. And so the first thing that managers need to do is get a very good, thorough, signed understanding of their water resources. Part of that understanding will suggest that they should only be making investments in geographies in crops that are appropriate for the geographies in which they're investing. There are going to be certain areas where it makes sense to grow a lower value crop like rice or alfalfa than maybe a permanent crop. There'll be other areas where it's perfectly sensible to grow a permanent crop. But there should be a matching of those liabilities, high value water rights with high value crops, lower value water rights with lower value crops, because that gives the manager the flexibility to kind of turn on and off their farming in responses to needs that the system may have, and the willingness of other users to pay a rental value on an annual basis significantly 2 to 3 times what farming would produce from that same type of from that activity. So there's a real need to match timelines between high seniority and high value crops. A third thing that managers need to do is they need to work with, partner with, hire water managers, water professionals, because the skill sets are different than the skill sets that most of your agricultural managers have. And the reason why they want to work with those professionals is because they want to make sure that if there are opportunities to capture on their lower value water rights, well, first of all, they can help them position their portfolios. But then once they've done that and they have some senior water rights growing high value crops, they might have some junior water rights or lower growing tomatoes or rice or alfalfa or whatever it is. And there might be opportunities to market that to a user, a real estate developer, a city, a mining entity, the environment for inflow stream purposes, during a drought cycle, other agriculture. And by having a relationship with someone who has those calls, understands the hydrology, understands the geology, understands the legality, understands what needs to be done to make sure that you can do it on the days that you want to do it, that makes a lot of sense from a fiduciary point of view. The other thing what they need to do, which is related to all of this, is they want to make sure they spend a lot of time during their due diligence in the communities where they are investing. It is frankly stupefying to me when I hear some large institutional investors talk about, well, we never thought our name would get out. We never thought people knew. We used an LLC that people would. These are small communities. Everybody knows everything. And you want them to know about you. And if you're investing in their communities, you want them to know why you're doing it, because that ultimately can be a very big beneficial arrow in your quiver. And part of investing the time in the communities is you will get an understanding for what does this community believe its future looks like. And once you understand that, you can tailor your investment expectations to what does that community believes. Because there are certain communities that might have an expectation that they will grow at a certain rate and will need more water in a much more compressed time frame than other communities that may say, we're not going to ever get to that type of level and we're happy that we don't want to grow. And when you invest the time in understanding those communities, understanding their water districts, understanding their expectations, then your investment is going to be more successful. Because the water is very local, and the worst thing you can do is have an argument with your local neighbors, because they're going to win that argument. Outside investors are going to lose that argument, full stop. And then finally, and this is really important for all of us to look at, is we need to take a critical look at our water system in the southwestern U.S. and try to figure out, looking at other systems like the Australian system, what tools do they have at their disposal after they tweaked and redid their system, which gave them the ability to improve their system, gave them the ability to be the driest continent and still have water availability for agriculture, gave them the ability to put money back in their rural communities. And we want to look at those tools and we want to figure out which ones are appropriate for our marketplace so that we can continue to grow food for our population, for export, in a cost-efficient manner, as the most cost-efficient manner as possible, while at the same time preserving our rural communities and the lifestyle decisions that those live in wish to make by moving to those areas. So that's a big statement, but it's really very important because our current system really only works for the lawyers and the hydrologists who benefit from the transaction costs are just way too high. And in some respects, you can think of it similar to the over-the-counter stock market many years ago, when it was very expensive to buy different financial instruments that today trade at 1% of the transactional costs of a number of years ago.